PYPL, also known as PayPal. I'm personally buying the stock heavily right now after it missed its earnings here with the fourth quarter. It missed its earnings by 1 cent, and they have lowered their guidance for the first half of 2022 and Q1. So what does this actually mean for the company? And is it actually fair that PayPal has went from $300 to now $100 a share, that being 65% decline? Is that actually fair? Is PayPal fairly valued at this moment? All that we're going to be talking about in this video. Simply Wall Street right here. That can help us get an overview over the financial position of the company, the future growth, and so forth. So you can see here, it gets a couple of rewards. It's trading below our estimates by 64%. And their earnings are forecasted to grow with 13.6%. This forecasted earnings guidance, 13%, was down. And that is also the reason that the stock slipped after its earnings call, because they gave this information to the shareholders that they wouldn't be growing their earnings growth annually by 15 to 18%, but now they have lowered that to 13.6. The reason for that is that there's a lot of competition coming up. We can see here that Simply Wall Street says MasterCard is a competitor. I definitely know Square is a competitor. Cash App is a competitor. But that said, PayPal is by far the biggest when it comes to this whole fintech financial services sector. The valuation on this stock is right now very unfair. So at its peak, when it was laying at $308 right here, you can see that it was a bit overvalued at that point. But since then, it has decreased in value by 64%, and now it is significantly undervalued, as we can see. So the PE ratio is under the US IT industry average. That said, PYPL traded at over 100 times price to earnings ratio just like a quarter ago. So it is crazy to see how that has went down, and people just have completely changed their opinions about this company. So the future earnings growth, there is a lot of competition coming up. They say themselves, PYPL, we're going to read an article in a bit, that this market that they're going after is $110 trillion market. And that would be like an 80x what they're doing right now, what market share they have right now. So they are really bullish on this whole idea, of course. So this market is continuously getting larger, right? And although there's competition coming up, PayPal, if you go on the App Store under financial services apps, right, you can see that PayPal is number 1 or 2, kind of competing with Cash App, right? They are always up there. Also Venmo, which they also own, and iSettle, which they also own, that makes payment interfaces where you can scan your Visa card. They make that, and all of these services that they provide, they take a cut of the transaction. That is how they make their money. So PayPal has actually been killing it for quite a while, but we can't expect this 26% annual earnings growth to continue because of the competition coming up. The financial health of the company is also great. Their short-term assets exceed their short-term liabilities. Their long-term assets exceed their short-term liabilities. So they are able to cover all their debt and pay that down, and with the cash that they right now have on their hands. They don't pay out the dividends. That would simply be a shame for this company to pay out dividends when they could use that to reinvest into themselves and grow that way. The management team has 2.1 years of average tenure all over the board, and their CEO Dan Schulman has almost 6.5 years of tenure experience. And ownership breakdown here, you can see there have been some buying inside the company here the recent months, and it's important to understand that this right here is the earnings, right? It traded up towards the earnings, and then the earnings came, and it flew completely, right? But since then, but before then, it already went down a whole lot, right? It already went down a lot. So you can see here from its peak, right, before we hit those earnings, it already was down like 44%. Then it hit the earnings, now it's down 65%. So people, the insiders were buying as it went down here with the whole market going down. So insiders have been buying, and yeah, so basically insiders have been buying. I don't know if this is this purchase is since the Q4 results came out and the stock tanked, but insiders are bullish on the company, and it's simply because right now this company is so undervalued. And I've looked at other YouTubers, right, that you might have heard of some of them, Jeremy from Financial Journey, and I also watched a video from the Everything Money guys, which are like really great investors and really conservative with their investments, and they were even considering like getting into this stock, and that says something because they are value investors. They usually don't like these sorts of high valuation companies, but they still had to say that this price is probably not a fair value considering what it has been trading at the recent years. I want to go over this article here from the Motley Fool. In fact, over 75% of the largest 1,500 businesses offer PayPal at checkout, making it the world's most accepted digital wallet. And so they are the leaders in the space, right? And they have so much capital right now that they could even start buying out, making acquisitions on other companies in this sector, fintech, in the fintech space, that are getting beaten up right now. One name I can just off the top of my head is SoFi. There's rumors that PayPal might be looking into that, right? Because SoFi has been devastated, right? At some point, when it's this beaten up, right, other companies would start to be looking into it, and PayPal is in the best position to make this acquisition over like Square or their competitors. So they're definitely in a great position to like get a big market share of this still expanding market. To maintain that edge, PayPal has rolled out a number of new products in recent years, including crypto brokerage services, humongous market expanding right now, QR code payments, and buy now, pay later. So companies like, I think it's Affirm, correct me if I'm wrong, but Affirm, a huge company, right? The only thing that they're really, not a huge company, let's just look it up. Yeah, they buy now, pay later, right? They're like a $10 billion company. The only thing that they offer really right now is buy now, pay later. And that is, for example, on Amazon. I think they got a deal with Amazon, and that is probably why this. But PayPal has this as like one of its sub tools that you can use. And that said, it's getting pretty exciting in a moment with PayPal. They also have a deal coming up with Amazon, and I have some math that could like kind of tell us how huge of a deal this is. So yeah, the company has also expanded partnerships with key players in the commerce industry, bringing its digital wallet to Roku, Salesforce, and Instacart. Additionally, Venmo recently launched on Booking Holdings, huge travel marketplace, and it is set to go live on Amazon sometime this year. This is insane, and this could help. Those moves have helped the company grow and engage their user base. So Venmo is one of the brands that PayPal owns, and Venmo is sometime this year. Like, you can already check out with PayPal on, of course, on Amazon, but you can now check out with Venmo. I've made some Google search on some numbers here. I don't know how correct these numbers are, like, but if you search on these search terms yourself, you'll get these and these results here, and you can go and check up on that. But this will give you an idea of how big this deal is. So Amazon's daily revenue is $638 million daily revenue. 5% checks out with Venmo, let's say that when they get Venmo sometimes this year as a checkout method, let's say 5%, 1 out of every 20 clicks buy with Venmo, right? I think that is likely to be somewhere around that. Venmo takes the information that I could find is they take a 1.5 to 3% cut, but I think they have a deal with Amazon. I couldn't find any information on what that cut is, but let's just take the low number here. I don't think it's going to be 3% because Amazon has huge like negotiation power, right? So they have definitely gotten a good deal on this. So 1.5%, Venmo takes that. So here, what I'm doing here is basically taking, okay, we have the daily revenue of $638 million, and let's say 5% checks out with Venmo, and Venmo takes a 1.5% cut. That is $478,000 daily that Venmo could potentially make here. And as of 2020, Venmo's revenue was $450 million, and that equals, just like if that was like split up daily, $1.3 million daily. That would basically be a 36% increase in daily revenue if this were to come true. So I'm not even saying that these numbers are correct, but just to give you an idea of the scale that this deal could bring, right? This is crazy. So to be quite honest, if this deal, I don't think that a lot of people who are not shareholders know about this, because I think most of the shareholders, they've heard of this deal, of course, right? But the people who are actually going to be able to bring additional money, right? The people who are not invested yet, who are looking at this stock and just seeing it go down, right? They don't look into the company as far as to like see these deals and see what they're doing. So they don't know these things. That is my like idea, because otherwise I think PayPal would be trading much higher than it currently is. So my strategy for buying here. So right now I'm down, because how can you possibly be up on this? So I started buying after the dip here with the Q4 results. I bought here first on $26 a share, and then I bought on, I think, 24, and then I bought on 21. So I don't know what my average price is right now, but I'm down around 13 to 14%, 13 to 15%. I haven't bought since, and that is simply because I have some problems with my brokerage, but I'm definitely going to buy. I see that they're having right now, they are a little bit up here pre-market, but I'm not going to buy today, because I think, like, my whole theory with this market, like, I think, because when I look at this crazy market that we have had for a good bunch of time, what I see is one day it's green, a lot, like the volatility, right? One day it's green, next day some news comes out, and I'm not going to buy on a green day. Although it maybe could be a stupid idea, because at any point this could turn around. But one thing that is for sure is that PayPal still haven't found its bottom as of yesterday's like, what is that date? As of the 17th of February, it still haven't found its bottom. And you can see that because the volume is simply so high. And if that volume is so high, that is because people, they aren't like in agreement of a price, a fair price. The market haven't found a fair price for the company yet, that they think is a fair price. That is why they constantly trade back and forth. Some people think it's too overvalued, people think it's too undervalued. That is why. So hopefully this video gave you some clarity. I'm definitely, if the stock stays in this range, like between, I think when it goes above 150, I'm going to be maybe a holder of the company at that point. But right now it's a humongous buy for me. So that is my opinion on PayPal right now. I hope you enjoyed this video. Have a great rest of your day, and peace out.